And of course, a quick look into Bursa Malaysia this morning, as at 9:52 a.m. we're looking at Bursa trading upwards at 6 points, up from 0.42% to 1,424 points. 304 counters are in the green, meanwhile 184 counters in the red. So we collaborate with some of our partners around the country, and of course in this morning's conversation we partner with Biztech Asia, where we will show you a clip of discussion between our friend Brian Fernandez and David Kuo, the founder of Smart Investors Singapore, for their Asian Midday Market Watch. This interview was taped yesterday afternoon, where they talk about some key issues regarding the market. Take a look.
Okay, so David, then for the benefit of the audience, just walk us through the Fed minutes and what the messaging that came out of that overnight.
Well, I think it's pretty clear that the Fed is intent on controlling inflation, come what may. And they said they would need probably more restrictive policies. And restrictive policies probably means higher interest rates and withdrawing more cash from the market. So I think that is the direction that the Fed is going in. It knows it can control inflation simply by stopping people from going out and spending money. So as far as the investors are concerned, we need to be very aware that the Fed is moving in one direction and one direction only. They were also toying with the idea that a 75 basis point increase, in other words, 0.75% increase later on this month, is not out of the question. So when you have a look at where the Fed fund rate is at the moment, and if you add on another 0.75%, that will take us to roughly about 2.5%, which is still nowhere near enough in order to control inflation. So I think we're going to be seeing a lot of interest rate increases from now until the end of the year. But I tell you what, Brad, a lot of people are betting on the fact that the Fed will blink first. In other words, the Fed will see a possible hard landing or a recession, and that it will get cold feet and it may not increase interest rates. And they're betting that the Fed may have to cut interest rates next year. But I personally can't see that happening, Brian.
So David, so you alluded to that in your an article you wrote a few days ago on the Smart Investor, where you actually used the word scorched earth. Share your thesis around this, please.
I know, well, scorched earth simply means that what the Federal Reserve is going to try and do is to eliminate any kind of growth whatsoever. If it sees any sign that people are going out there and spending money. I mean, a good analogy, Brian, would be to go and have a look at what happened at the beginning of COVID-19. What did governments around the world do in order to try and control the spread of the virus? And we can probably equate the virus with inflation. Inflation is a kind of virus that finds its way into everything. And so what did governments around the world do, Brian? They locked us all in, right? They stopped us from going out. So it was almost like a scorched earth policy with regards to taming the spread of the virus. And in the same way, I think the same thing is going to happen with regards to the economy. What the Fed will try and do is to scorch the earth. In other words, stop everybody from spending money. And that is the only tool it has, because it can't control the supply side. And so therefore it has to control the demand side, which therefore means that if the Fed can stop me from going out and spending money on buying, say, chicken rice, then of course chicken rice prices will start to come down, because as fewer people go out and spend the money, then of course there will be enough supply of chicken and rice, and so therefore prices can start to come down. So I think that is what I'm trying to sort of say to people, that the scorched earth policy is something that they need to be aware of. And in a scorched earth policy, what you need to do is to find the fittest companies that will survive, Brian.